Good morning, traders. Today is Tuesday, November 15th. My name is Charles, and this is the Pirate Traders live stream. Welcome, welcome. All right, well, kind of an unusual deal here with this overnight last night. Very, very interesting to me. I don't think I've seen anything that looks quite like this in a while. This reminds me of back when it used to be a bull market. Okay, so what did we get? Well, yesterday we basically just got a balancing day, right? The market basically just went up and down. It rotated around in its range. I would see that as the market essentially just taking a day to cool off after all this excess to the upside. All right, so we had this big, massive move to the upside, and so the market just needed to chill for a day and kind of let itself absorb some of that momentum. But then we did still make higher highs, higher lows on the day, and have value overlapping to higher. So on the daily time frame, well, intraday yesterday, the market was balancing. On the daily time frame, we still have excess. We still have momentum. The market is still going higher. Okay? But then at the very end of the day, something unusual happened. We got a spike down in the last few minutes of the day, and we closed in the spike. Now, normally, that's the market's way of telling you that that momentum is coming to an end and that the market probably needs a pullback the next day. So I went into the close yesterday assuming today we were going to get a pullback. And then what did we get from the overnight? I mean, just look at that. A very strong, crystal clear trend, right? Pushed higher, rotated, pushed higher, rotated, pushed higher, rotated, broke out. Okay? That's just very, very freaking strong momentum for the overnight to trade like that without ever really having a legit pullback. So that is a sign to completely ignore that spike down. Just pretend it never even happened. So we still have momentum to the upside. We've opened with a gap up. So the first order of business is going to be filling that gap. That is the market coming back down to yesterday's high and testing yesterday's high for support. If we are not able to get to yesterday's high, or we get there and find support there, that is what we call a gap and go, which is the most bullish scenario. And we would look for continuation to the upside. If they pull back down to yesterday's high at 40.17 and they do not find support, they pull back there and they continue into yesterday's range, well, that is obviously less bullish. And we're looking for the market to pull back down into yesterday's range, looking for support around the 4,000s. Okay? So we're looking for a gap fill. Do they find support or not? If not, we're looking for support around 4,000s. If so, we're looking for continuation to the upside. First target to the upside would be testing the overnight high, which it is important to note, stopped right exactly before re-entering a previous gap. So that is weak. Shit's weak. So if I had to say overall, my tone here this morning is bullish. But I got to see them try to fill that gap before I even think about getting long. Now, I know what you're thinking, Charles, boy, this looks like a gap and go. This looks super bullish. Not yet. This is short covering. The fact that we only went one tick below the opening price means the A period low is weak. So you've got a weak low and a gap that has not been even tested. So these buyers are short covering and FOMO. Not good, strong hands. The good, strong hands are waiting to get in somewhere in here. Heidi, welcome. Thank you for the sub. All right. Well, more FOMO. No pullback. So I am bullish on the gap and go as long as we stay above yesterday's high. James says, somebody's got an independent state of mind. Could be a new song sang by the Reps. Cool. Thanks for the heads up. Morty, FYI, FOMC bar, speaking at 10. FOMC is the meeting that they have. But I know what you mean. A member of the Federal Reserve Board. All right, so as they come back down, if they pass through the opening price, okay, if they pass back through 40.26, they're looking to try to fill that gap, and we'll keep a close eye on these ticks. If they cannot fill the gap and they find support and they start to bounce higher, particularly if they get back to the zero line and find support and start to bounce higher, that is a gap and go. All right. Looking like they want that gap fill. Or try anyway. Probably won't be able to make it. Screwball says, this looks weak to me. Weak how? The momentum looks weak? Oh, buying at the low. Yeah. Okay. Trying to fill that gap. So this is where we're watching those ticks, right? When they get back to the zero line, it's even Steven. The overnight inventory has been absorbed. Anybody who was long, who was looking for a chance to take profits, has had their chance. So if they can hold these ticks up here on the zero line, it's a sign of new buyers stepping in, which would be a gap and go. Okay, so now we're at that first potential support. Focus on those ticks. Can they wick it back up? All right, so we're finding support on the ticks. That is bullish. All right, there's the, or we're still one more tick. There's the gap fill. Okay, so this is the really pivotal moment. If the buyers want to keep the momentum going, they've got to step in here, create some support, and get back above yesterday's high. If they continue to stay inside yesterday's range, it increases the odds that the market needs to pull back down into yesterday's range more. We just don't have the momentum yet. So we're looking for the buyers. This is their last chance. Can they hold it? We got 82 likes out of 170 people. Do any of the 90 of you that haven't pushed the button want to give me that little thumbs up? Little thumb? Little pushy wushy? I sure would appreciate it. Lamb sword? Lamb sword. Thanks, man. 114 likes. Thank you, guys. Appreciate you. So obviously I'm bullish here for gap and go. As I said, if we start to pull down into yesterday's range again, I will be back to neutral. But it does seem like we have buyers here. So remember, the fact that yesterday we made a higher high and a higher low and had value higher is a sign we still have momentum in the market. The fact that we gapped up this morning is a sign we still have momentum in the market. And finding support when we filled that gap is another sign we still have momentum in the market. So at this point, I want to stay above yesterday's high and keep that momentum going. If we start to pull back into yesterday's range, then that thesis is over, and we're probably going to balance inside yesterday's range. Can they hold it? I was so excited about the market going up, I forgot to push the thumbs. You're forgiven. All right, so as we're finding support at yesterday's high, the next target is to get through the halfback. We've pushed back up into that halfback. We see, is that resistance? Getting through it would be bullish. Thomas Shelby, 10 a.m. Fed Vice Chair Michael Barr testifies on regulations at the Senate Banking Committee. Yeah, it's not like that's like an FOMC meeting and it's going to trigger some big move. He'll be talking for however long he's talking, and the market may react to things that he says. That is certainly possible. But I still think you can just play it like a normal momentum play. We gapped up. We found support at the previous day's high. That's all you need to worry about. The catalyst of what he said could cause the market to go up just as likely as it could cause the market to go down. Nothing wrong with getting in a trade. David V with the tick. Do you read it the same as you would read a regular chart? For instance, if you have a red candle that closes above the zero line, would you find this bearish or still bullish? I would find it still bullish. I actually don't really pay attention to the color of the ticks at all. It's about the momentum. So are they building momentum lower, right? Are they starting to trend lower, or are they building momentum higher, or are they just going sideways? That's the first question. Are we, losing support, gaining support, or is it just going sideways? And then is it above or below the zero line? So if it's trending lower, but it's above the zero line, it means the buyers are still in charge, but they're losing momentum. They're running out of steam. Whereas if it's trending higher and it's above the zero line, well, then it's all systems go. They have the momentum and the buyers are in control. Vice versa on the way down. Okay, so passing back through the halfback is bullish. So the next target is testing repairing the weak high we left behind at 40.39. And then if we can find new buyers up there, testing the overnight high at 40.50. Thomas says, only price pays. It's true. And only price tells the truth. That's the other thing. The only reliable information is the way the market reacts to the news, not the news itself. And there is no way to predict ahead of time how people are going to react. People are just too crazy. Anything can happen. Okay, so as we printed the B period here, we pulled the point of control a little tiny bit higher. That's slightly bullish to see. We also pulled the value area up against the high of the day. That increases the odds. We need some more excess up there, as well as the weakness. So that is also a little bit bullish to see. What an interesting moment for them to choose to drop this news that the Fed is working on their digital currency right when there's all this mayhem in the crypto world. Don't worry, Papa Government will save you. Forget those freedom coins and get you some Fed coin. Scooball, can you look at the daily on the queue? I certainly can. I mean, there's no two ways about it. That's bullish. That's bullish AF. They broke out of the larger downtrend in the market, which we still haven't tested on the ES. And they've just been in a straight rocket fuel excess ever since then. So they should run out of momentum pretty soon here around the 12,200s. And then we get a little sideways action in here. But that's bullish on the daily. I will say, though, I mean, it's funny how, like, they broke the downtrend before we did, but this doesn't look as strong as the ES. The ES made higher lows where the NQ made lower lows. So there's a very real chance that this is still just another bear market rally. So we'll take it one tick at a time. Okay, looking for support here at the halfback. 40.27 to head back up and repair that weak high. All right, testing the support once again. Same thing as before. We're looking for those ticks to bounce back above the zero line. If they're able to push through the support and get back down into yesterday's range, I will be neutral once again. But of course, I'm expecting support. Scooball says it doesn't look like a lot of momentum. That is true. It certainly doesn't feel like a gap and go. Invictus says it feels like a FOMO trader trap. It is possible, but again, normally when you have things like this, it's the opposite of what you think it is, right? The FOMO is in people shorting because they think the market's going to pull back. And then out of nowhere, they just get their face ripped off and we shoot straight up to the overnight high. That's why times like this, it's best to just focus on the market generated information. All the things I listed a few minutes ago, nothing has changed, right? We still had momentum on the daily, gap up, support at the previous day's high, value is higher, week high, like on and on and on. All the reasons for the market to go higher are still here. So as long as this support holds, we should not change our mind. We should wait for the signal from the market. And a hat says the NQ hasn't filled their gap. What's the deal, NQ? Get in there and fill that gap. Oh, no, that's a really big gap. Gaps that large often don't fill in the first day. So it would not be unusual for this to just be a straight up gap and go. All right. Well, as we start to push back down into yesterday's range, and I guess technically we haven't started yet. We just found support. But with the ticks failing, okay, so we could see the ticks are starting to trend lower, and they're just starting to push below the zero line. So that is a sign that we are losing that momentum. That gap and go momentum is running out. I should have stayed bullish here, technically, right now. We still have support, but I think it's going to break and come through. And if it does, then we're looking to pull back into yesterday's range. Now, it's important to note it's not really bearish in the traditional sense of the word, because I suspect, just like we found support with the first push lower that we had, and then we came back up. And then we found support at yesterday's high, and then we came back up. I think we're going to keep doing that. I think every little node of support in yesterday's range is going to hold, and it's going to either be a slow melt lower or just go sideways somewhere up in here. So I'm not bearish by any means, but I am, again, I was a little bit early changing the banner. Once we pull back into yesterday's range, I will be neutral, looking for more information. Shit. All right. I got to change it back, guys. Sorry. Hasn't broken yet. They're holding the ticks. They're holding the high. So it is still a gap and go. $7 Mile Reach, buyers just wanted that discount? Yes, sir. Now the question is, was it enough of a discount to bring in enough buyers? Can we break through the resistance? All right, they're starting to flip the order book, taking the resistance and turning it into support. Scuba, what a nice trampoline of icebergs. Yeah, that's why. We've talked about this many, many times. The stronger hands players, they don't FOMO in at the high. They wait for the pullback. This time they were patient. They waited for the second test of the high. And they're still waiting. They've still got orders in the books. All right. Well, tricky moment here. We got a bit of tug of war happening. We do have the momentum on the daily, clearly. So as long as they can hold yesterday's high, they can continue to push the market higher. They also have a higher probability that they want to test the A period high because it is weak. So as long as we can stay above yesterday's high, I do believe the highest probability is further upside continuation. But of course, if we start to pull back down into yesterday's range, as I just mentioned, the first thing is I go neutral. So I'm not looking to short it, right? It's not like if the C period comes down here and breaks the A period low, I'm instantly looking for the market to crash and burn. There's a very real chance that we just have another day like yesterday where we just rotated higher prices, right? And so as we start to pull back down into yesterday's range, I will no longer be bullish, but I won't be bearish yet. I'll look to see, because we may just poke down and find support on the very first support, and then that's it. We just go sideways. So I'm going to wait and see. I'm going to be watching the ticks, watching the momentum, testing support, testing resistance, see who's in control. Then I'll be able to make an analysis moving forward. So yeah, bullish as long as we're above yesterday's high, neutral inside yesterday's range. With that, I wish you the best of luck, and I will see you here tomorrow morning. Members of the brigade, weigh anchor. It's time to sail. Sail away to the stream.